So hello, everyone. My name is Nick Waterbeck. I'm a retirement education consultant here with Human Interest, and today I'm going to talk to you about your new 401k plan. So on the agenda today, we're going to discuss what a 401k is, how the 401k can benefit you, and how it fits into your retirement needs. Then we're going to discuss your actual plan highlights. We'll go over how you can contact Human Interest if you have questions regarding your account in the future. Then we're going to watch a website demonstration video so you can see how to navigate through our website. And then at the end, if you have any questions, we'll go ahead and address those then. So to start with, well, what is a 401k? Well, a 401k is a retirement savings plan offered through your employer. Now, contributions are made through payroll deductions. So all you'll do is decide what percentage you'd like to contribute from your paycheck. Human Interest will deduct that and then deposit it into your account. Now, keep in mind that retirement plans like these are designed with long-term savings goals in mind. I'm going to show you why that's important to remember here in just a moment. So, how does the 401k benefit you and how does it fit into your retirement needs? Well, a common theory is that a retiree will need to replace about 80% of their pre-retirement income just so they can maintain their lifestyle in retirement. Now, Social Security does help with that. It usually replaces about 40% of that income. But the other 40% will need to come from some kind of retirement income source or savings vehicle, like a 401k. So just keep that in mind that when you're contributing to your 401k, it's so that you can maintain your lifestyle in retirement. But how does contributing a small portion of your paycheck allow you to do that? Well, this is an actual historical graph of someone who had $10,000 in their 401k at the beginning of 1994 and invested that $10,000 into the S&P 500 stock market. Now, without contributing any additional funds, just allowing that $10,000 to remain invested over the next 30 years, that $10,000 grew to over $227,000. Now, what this graph is illustrating is a concept called compounding interest. And that's essentially where your money has growth, and then that growth has growth on top of growth on top of growth. Think of it kind of like a snowball effect, if you will. But a couple things with this graph I do want to point out, and the first one you're probably noticing it just from looking at it, it's not just a straight upward trajectory. There are ups and downs involved with investing. And that's why earlier I mentioned it's important to remember accounts like these are designed with long-term savings goals in mind. Now, the other thing that this graph illustrates are different scenarios. If someone were to have sold out of that S&P 500 during a down market cycle and reinvested their money into a money market account, how much their account balance would be worth at the end of that 30-year period. So if someone had done that during the global financial crisis in February of 2009, by the end of 2024, their account balance would be worth just under $21,000. Now, if they'd done the same thing during the COVID pandemic in March of 2020, it would have grown to just under $93,000. But again, by just allowing it to continue to grow and compound, it's worth over $227,000. Now, let's talk about your plan specifically. So, in order to be eligible for the plan, you just have to meet two criteria. You have to be at least 18 years of age or older and have 6 months of service with your employer. Now, once you meet those eligibility requirements, you're automatically enrolled in the plan at an 8% deferral of your pre-tax salary. But here's the thing with the 401k. Unlike other benefits where you can usually only make changes during an open enrollment period, with the 401k, once you become eligible, you can go in and make changes to this at any time. So you can stop your contributions, start them back up later on. You can decrease them, increase them, again at any time. Just be aware, though, that with payroll deduction changes, it can take 1 or 2 pay periods to take effect, just depending on when in the payroll cycle you make that change. Now, what'll happen is once you're eligible, Human Interest will send you an email, and it'll look something like this over to the right. Now, in that email, there'll be a button that says set a password for your account. Now you'll click on that. That'll take you directly into the website where you can create a profile. You can change your contribution rates. You can select investments. Now we're going to watch a website demonstration video that's going to show you exactly what that looks like. So more to come on that a little bit later. Now, another provision that your plan has is what's called an automatic contribution increase. Essentially, if you decide, hey, I'm good with that 8%, I'll leave that alone, your plan will automatically increase you by 1% once a year in January until you reach a contribution rate of 15%. Now, once you reach 15%, it'll no longer automatically increase you, but you always have the option to manually increase it at any time. Now, one thing with this provision, I do want to let everyone know, if you go in and make any kind of changes to that contribution rate, so you stop it, start it back up later on, or decrease it or increase it, or any other kind of changes at all, the automatic contribution increase will no longer take effect, and you'll basically stay at whatever you select your contribution rate to change to. So just want to let everyone know about that provision, kind of the ins and outs of it. Now, alongside your contribution, your employer is also doing a matching contribution. Now, they are matching dollar for dollar on the first 1% that you contribute. So as long as you're contributing at least 1% of your pay, your employer is matching that 1% dollar for dollar. So just keep that in mind that if you can contribute at least 1% of your pay, you will receive that full employer match that your employer is willing to contribute to your retirement on your behalf. So just keep that in mind when you're deciding how much you want to contribute. Now, with the employer match, there is what's called a vesting schedule. Now, vesting means ownership of your employer contributions. This is just for your employer match. Your contributions are always 100% yours. But how this works is that if you separate service before you have 3 years of service or more, any employer match that's contributed into the plan would go back to the company. Now, once you're with the company 3 years, doesn't matter if you leave a day later or 40 years later, all of the employer match is yours to keep. Now, this is, again, based off of years of service. So if you already have 3 years or more with your company, then all of the employer match is yours to keep already. So just want to let everyone know about that as well. Now, there are 2 different ways that you can contribute into the plan. There's what's called traditional, and then there are Roth contributions. Now, traditional are what are called pre-tax. Now, what that means is that you can actually deduct those contributions from your current income, but then you're taxed on the money when you withdraw it in retirement. So I always like to do examples on these. So let's imagine somebody's gross paycheck is, let's say it's $1,000. And that individual decides to contribute, let's say $200 of that to their traditional 401k. Well, that means that the remaining $800 is what will be subject to ordinary income tax, not the full 1,000. But then when they retire and start taking distributions, that's when they'll pay ordinary income tax on their contributions, as well as any earnings that those contributions have made over the years. Now, Roth, those are considered after-tax contributions. So the Roth 401k contributions are taxed today, but the earnings are tax-free as long as you meet 2 criteria: that you've had the account open at least 5 calendar years, and you're at least 59 and a half or older when you start taking distributions. So going off the same example, if your gross paycheck is 1,000 and you contribute 200 to the Roth 401k, you're still taxed as though you earned the full 1,000. But when you retire and start taking distributions, as long as you're at least 59 and a half or older and you've had the account open at least 5 calendar years, then all the earnings are tax-free when you withdraw them. Now, the IRS does set limits as far as how much you can contribute into the 401k. Now, for 2026, if you're under the age of 50, you can contribute a total of $24,500. Now, if you're 50 or older or turning 50 by the end of the calendar year, you can contribute the same amount plus an additional $8,000 catch-up contribution for a total of $32,500. Now, also, if you're turning between the ages of 60 to 63, the IRS is actually increasing the catch-up amount to $11,250. So those individuals can actually contribute a total of $35,750. Now, you can contribute this either all traditional or all Roth, or your plan does allow for what they call split contributions, where you put part of it in as traditional, part of it as Roth. Doesn't matter how you do that, but the total amount cannot exceed these limits based off of your age. Now, earlier I mentioned that your employer is doing a company match. So two things with that. Doesn't matter if you contribute traditional or Roth, the company match is either one. But also your employer match, that does not count towards these contribution limits. So this is just the amount the IRS allows you to contribute. Your employer match does not count toward it. Now, also your plan allows for something called a rollover. Now, a rollover is essentially where the IRS allows you to consolidate retirement accounts. So as an example, let's say that you work for a previous employer and they had a retirement account and you had contributed some money into it and it's just kind of been sitting there and you decide you'd like to move it over and consolidate it into the new plan. Well, as long as you're eligible to contribute, you can do that. And we're going to go over how you do that on the website video. But one thing I just want to let everyone know, if you do decide to roll over any funds into the plan, the amount that you roll over does not count towards your contribution limits either. Now, if you're not quite sure where to start, or maybe you just want a little bit more information on 401ks in general, Human Interest does have a learning center you can utilize. So you can go to humaninterest.com/learn. Now, there's several different guides regarding 401ks, financial wellness articles, retirement calculators you can utilize, and those tools are updated quarterly. So if you have a chance, definitely check those out. Also, we do have a support center that's available to answer any questions you might have regarding your account in the future. Now, there are two different ways you can reach out to them. You can email them by going to support.humaninterest.com, or you can call them directly at 855-622-7824. Now, their office hours are Monday through Friday, 6 a.m. to 5 p.m. Pacific Time, or 9 a.m. to 8 p.m. Eastern Time. Now, with that, let's go ahead and watch the website demonstration video. That way you can see how to navigate through our website. And then I'm going to show you our retirement education portal, and then I'll open it up for any questions you might have.
Hello, welcome to the Human Interest family. I'm here to walk you through the onboarding experience when setting up your 401k on the Human Interest website. Let's get started. After you click the link in your sign-up email, you'll be taken to a page where you can create a password. On this page, your full name and date of birth will already be filled in. Please make sure that your password meets all the character requirements listed on the page. Because Human Interest is integrated with your company, your essential information will be automatically filled in for you. To proceed, simply enter a backup email address in the designated field and click the Next button. Here, you can decide how much of your paycheck to save for retirement. You may have the option to contribute traditional pre-tax, Roth, or split your contributions if you desire, and you can choose the percentage you want to contribute each pay period. As you're using Human Interest, you can click on Tooltips to get help and explanations on terms and topics when you need it. If you want to contribute the maximum amount allowed by the IRS, simply click the Max Out Contribution button, and we do the math for you based on your salary and the number of payroll periods left in the year. To help you avoid penalties, we'll automatically stop your contributions once you reach the 401k contribution limit. We understand you may need to adjust your contributions at some point. You can log in at any time and make updates. We'll automatically push those changes back into the payroll system. Next, you can review and adjust your portfolio. When it comes to investments, you have three options. You can go with a model portfolio based on your age, a model portfolio using our risk slider, or you can create your own. If you'd like to be more hands-off, you may choose the model portfolio option, which is based on your age and years to retirement. This can be adjusted by answering risk tolerance questions or making custom changes. The model's philosophy prioritizes diversification and low-cost investments. The model portfolios are offered through Human Interest Advisors, a registered investment advisor and subsidiary of Human Interest Inc., and are rebalanced quarterly to help keep your asset mix aligned. Please note, diversification and rebalancing do not assure a profit or protect against loss. Investing involves risk, including the risk of loss. We'll also automatically adjust your portfolio to be more conservative as you get closer to retirement. Our tool is simple but flexible. If you'd like, you can use this slider to adjust your portfolio to have a more aggressive or more conservative asset mix. You can see in real time what your portfolio looks like based on your adjustments. To fine-tune the model allocation, take a short questionnaire, and the algorithm will incorporate your risk tolerance with your age to adjust the model allocation. And of course, you can be more hands-on and build a custom portfolio by choosing which funds to invest in individually. We encourage you to read Human Interest Advisor's investment philosophy page when making your investment selections. Here you can manually choose which funds to invest in and what percentage to allocate. If you decide you'd rather use a model portfolio, you can revert back by clicking View Model Portfolios or using the back button. Finally, verify all entered information for accuracy. If all information appears correct, select the checkbox adjacent to the confirmation statement and click Confirm to submit. This is your main account overview. On this page, you can see your total balance, your overall performance, your contribution rate, your portfolio, and recent activity. In the performance section, you can see the overall performance your portfolios change in value, along with your personal rate of return. Then, when you scroll down, you can see your funds and glance at their year-to-date return, 1 year, 3 years, and 5 years. You also have quick access to prospectus reports for each fund offered. Just click the ticker symbol to view details and gather the information you need to make informed investment decisions. Ticker symbols are short, unique codes used to identify companies or mutual funds on the stock exchange. Click Overview to get back to your main dashboard. From here, you can also update your contribution rate. Under Contribution, click Update. You'll see a screen similar to what you saw during onboarding. You will have the option to select traditional contributions and may also see the option for Roth or split contributions. Contribution rates can easily be adjusted at any time. To make changes to your portfolio, click View More here. Here, you can see a breakdown of your current balance, along with your fund activity. You can also update your portfolio in the same way you did during onboarding. Click Update Portfolio, make the necessary changes, and confirm your choice. Under Activity, you can see your recent activity. Click View More to see all transactions in your account. Under Rollovers and Withdrawals, you can move your old retirement plan into Human Interest to consolidate your assets, or might have the option to take a distribution. Click Find and Rollover. You'll see 2 options. Use the Rollover Concierge feature, which guides you through moving an old retirement account to Human Interest, or choose to do it manually. Rollover Concierge is the easiest way, even if you're not sure who your previous provider was. We've partnered with Capitalized to securely locate and transfer your funds free of charge. Let's walk through what it looks like using the concierge option. Click Agree and begin rollover. If you know your old provider, select Yes, I know where it is. Capitalize will guide you step by step, starting with details like your former provider, employer, and the date you left. Next, you'll choose the type of retirement account you're rolling over. Don't worry if you're not sure, just select the best option. You'll then have a chance to add any special instructions or skip that step. After reviewing the details, confirm that you want to roll the funds into your Human Interest account. You might be asked if the amount is over $25,000. If you're unsure, just select that option. If you need any help, every step includes a help button connecting you directly to Capitalized support for real-time assistance. Next, securely connect to your old provider using your username and password. For security, you may need to verify with a code sent to your phone. A summary page will show your info and a timeline of the next steps. If you don't know your old provider, select No, I need help finding it. Capitalize will then ask for your former employer and your last working date. It will search its database to locate the provider that managed your old 401k. You'll still go through the same simple steps, choosing the account type, adding notes if needed, and reviewing your information. That's it. Click Done, and you'll see a summary and timeline. Capitalize will take it from there and follow up with your next steps. If you prefer to handle the rollover yourself, simply click Proceed with Manual Rollover. Under Provider Name, select the provider that currently holds your retirement assets. Under Account Type, select your plan type from the list. You can also enter your account balance, but this is optional. Once ready, click on the Submit Rollover button. We will shortly send you an email with details on how to roll over your funds to your Human Interest account. You can submit this form again if you have additional accounts to roll over. Please visit the support tab for assistance from our support team or answers to frequently asked questions. There, you can access helpful resources and submit a case online for personalized support. When you click your name in the top right corner, a menu of options will come up. Click Profile to update your information. Under your information, click Update. For security purposes, you'll be asked to re-enter your password. You can make updates to your personal information. To update your contact information, such as address and phone number, click Update here and follow the same process of entering your password. Under Communication Preferences, you will be able to indicate if you would like to receive emails notifying you when your contributions are processed. Simply checkmark the box. Click here to add or update your primary beneficiary and secondary beneficiary. A secondary beneficiary is used in case the primary is deceased. If you are legally married, your spouse is automatically your primary beneficiary at 100%, unless your spouse consents to your beneficiary choice on the consent form with a notarized signature. A consent form can be found on your participant dashboard. You can add multiple beneficiaries as long as the percentage adds up to 100%. Under Security, you can turn two-factor authentication on or off. To change your password, click Update under the Login section. You will be prompted to enter your current password before changing it. Under Documents, you can find your quarterly statements and annual reports, plus other documents available to you, such as annual notices, fee disclosures, and your summary plan description. Under FAQs, you'll be able to find answers to our most frequently asked questions. That's all there is to it. When you're finished, simply sign out.
Okay, real quick here. Just want to show you, this is the Retirement Education Portal. Now, this is what I'm going to be sending to everyone here later today. This will have a copy of the presentation, as well as the website demonstration video, and then our meeting will be attached here as well. A couple other things I do like to highlight in the video, or in the portal rather. There's in this middle section, there's what's called short explainer videos. These are very quick 1 to 3 minute long videos on different financial topics. So things like pre-tax versus Roth or stocks, bonds, and mutual funds. So if there's a particular topic you want to know a little bit more about and you have a few minutes you can spare, you'll have access to all these different videos in the portal. Then more towards the bottom, there's a financial wellness section. These are written articles. Again, some of them might be of interest to you. You know, things like saving for retirement as a couple, or paying off student debt versus saving for retirement. Then at the very bottom, there's a link to actually log into your account right here. You can visit the Learning Center using this link. Or if you have questions for our support center, you can either email them using this link, or the phone number and office hours are available right here. So again, just want to let everyone know I'm going to be sending this to you here later today. But with that, that concludes our presentation. I'll go ahead and stop the recording.